Good morning. This is Alpha Trends, and I'm Brian Shannon. I'm coming to you live from Place Your Trades Network. Today, we're going to be talking about these crazy markets. A lot of stuff going on here. You can see on my screen, I have on the left here the Trade app. It's not actually the app. This is the desktop version. And on the right, we're going to talk about some charts with these markets because that's really the best way I can describe to you what I see here. Today's podcast is brought to you by Trade, and that's what you see on the left there. They did a custom app that's dedicated to trading these event contracts. This is where everyone on Place Your Trades is using for their trades. So if you use the link in the chat to start using the Trade app, you're going to, for free, that's where you can follow around, make your own picks. And make sure you like and subscribe this channel, set your notifications so you never miss this podcast. It's an amazing talent here that Anthony Crudele's put together, and fun, entertaining people. And I'm a morning person, but I think I'm not a morning broadcast person. So sorry for any hiccups here this morning. And I was out the last 2 weeks, so I don't have the same experience getting up to speed as these other guys, but enough excuses for me. The market is what needs excuses. This has just been some pathetic action in terms of, just the big volatility. And I think it's really scaring and shaking a lot of people out. That's kind of a good thing. When I think of a volatility, the volatility we've seen in this market, we saw, I think on Monday, that a lot of people were talking about, 3 days in a row of plus or minus 2% volatility in the S&P 500. And when you see that volatility, you're shaking out a lot of people, bulls and bears alike. People who thought, hey, that CPI low, that was the bottom. And then the next day, right over here, getting crushed like that is really just, it's disheartening. We've all been there. You've been in that trade. I've basically been sticking to very short-term trades. That's what's perfect for these event trades is they expire at the end of the day. So for instance, let's look at this over here. The S&P 500, this is based on the futures contract, and we know the futures contract doesn't close at 4 p.m. Eastern, but the event contracts here for the E-mini do close at 4 p.m. Eastern. You can see here on the left where it says E-mini, it's got 6 hours and 55 minutes left before this trade is over. If you look down, here's what we have, what they offer. They E-mini, NASDAQ, Dow Jones, light sweet crude oil. We'll talk about that one in a minute because I did my first trade in that the other day. I'll let you know how that worked out. Stick to your own lane. There's a hint. Gold is that market, goofy hours. I never trade gold, but they close in 4 hours and 25 minutes. And the E-mini Russell 2000, of course, we have that. The dollar, that's pretty strong. The euro dollar is weak. The dollar itself is strong this morning. And you've got natural gas. Again, I don't know who Henry Hub is, but it probably isn't a name, but someone's name. Silver and copper. I've never traded copper in my life. I have zero desire to do so. I don't think you'll ever see me talk about copper. Their goofy market closes in 3 hours and 54 minutes. It might sound goofy to me, but not to other people. Silver, it's been in a horrible downtrend. So, on the screen here on the right, we're looking at the S&P E-mini. What the heck are all these lines here? If you know my work, I'm a big fan of the anchored volume weighted average price. In fact, the reason it's on a lot of these platforms is because I've been talking about it nonstop for the last 10 years, and a couple of these trading platforms, charting platforms have put it on there. Let's go left to right on here just so you can understand what I have. This is the low of September right here. So important highs and lows are where I always set an anchor. And you'll see that it's not always going to be a magic number, but you can see that, from that rally, we held that volume weighted average price. And then as it broke down, then things got really ugly with a beautiful pattern of lower highs and lower lows. So once it broke down there, I put a volume weighted average price on that high because I knew that was the high. Anyways, here we are today. This blue one it's not charting school here. We're here to talk about trades and how you can use this to make money. So here we have the CPI. When we have a big market that shocks the event, like the CPI, I always put a volume weighted average price on that. This is the low of this week. And so far this morning, you can see we're down to that. Now, last night, if you looked at the futures, you would have seen a different story. Right now, they're up 21 or about a 0.5%. Last night, I think I saw them up maybe 37 points or so. So we've had a big overnight range. The market has dropped and right down to this volume weighted average price. And when you just look at traditional support and resistance, if you're familiar with that, this prior high in here seems to be holding as support. So what I'm looking at here is how do I trade these S&P 500 today for a bet that occurs today? Well, I think that this volume weighted average price is going to provide support. Last night, the market was up because Netflix had reported earnings, and the stock is still up pretty significantly. And it's faded a lot of those gains, though. I think it's about 12 points or so off of its highs. Still up significantly, like I said, up 25 points, 10.5%, which is impressive. But the market itself, you have to remember, the market isn't one stock. A lot of people think, hey, Netflix is up, that means the market's going to soar. And that's not the way it is. We're in the middle of earnings season, and we've got a lot of things going on. So here we are hovering around this volume weighted average price. Let's look at a 5-minute chart to take a closer look at some of this action. And I'm not used to using this charting platform in particular. So here you can see the action around that. Now we're still clearly, even on this 5-minute time frame, over the last hour and a half, we're still making a pattern of lower highs and lower lows. So we're still bleeding off from last night's excesses is what it looks like to me. And we're at a level that I think is likely to provide support, but it's not showing it yet. So here's how I want to talk about this. If I just click on this market, the E-mini, here's what we get. We'll get a chart. Their chart, it's good enough to see if you don't have anything else, but I want to look at the strike list. So the strike list here tells me, so we're at 37.07. So if I think the market is going to close above 37, that means I have to pay $11.50 to make that bet. They all expire at either 0 or 20. So if I'm correct and it closes above 3,700, my $11.50 will turn into $20 in 6 hours and 50 minutes and 51 seconds. So I'm not ready to make that buy yet. And in fact, I'm not sure I want to buy the 3,700. I'd rather get a little bit of extra juice and go out to the 37.25. So right now they're showing it, that the price is $7.25. Here's the thing. There's a bid-ask spread that you don't see, unfortunately. So especially when the market is moving in to your level, you don't want to be buying at the market. Instead, you want to look at, and I forgot I'm supposed to share this on Twitter. I don't see a tweet about it. It's streaming live on Twitter. So those of you who are joining on Twitter, thanks for joining, and everybody else as well. Anyways, sorry to lose my train of thought. I didn't lose my train of thought. That's the good thing. If you thought they were going to close above 37.75, you're extremely bullish, and you're kind of crazy here because we're 70 points away from there, and the momentum is lower. You'd only have to pay $1.75 here. Where I was going though was, if you wanted to look at this and you wanted to buy this event contract, let's say I want to buy it, I would say yes. Well, I want to say, how many do I want to buy? And let's just put in a trade for one. And what we want to do, so this is $7.25. Literally, you have basically nothing. It's lunch money here if we buy this. Let's see if we can buy it at $6.50. Let's just stick in a bid there just for the fun of it. And you can see the orders working on the market right now. Now, if I get filled on that, I don't care. I'm going to most likely be buying some of these contracts today once we kind of settle down just a little bit. Maybe we're doing that now. I don't know. But, here's the thing is that as we were talking about, oil, and I said, stick to your lane. Well, in oil, we came down to two important, here we have a pattern on this daily chart on the left, very clear, lower highs and lower lows. And then I put anchored volume weighted average price levels off those two lows. And they came together right in here at about 85 on this was Sunday evening when they were in there, and I tweeted about it. And this is the on the right, the hourly chart, just to show the detail around those two volume weighted average price levels. Well, it came down to that level, and I bought some actually just right in here. And what I didn't realize was there was a $2 spread in it at the time. So the oil went up $2. I think I paid maybe, let's say, $7 for these things. And thank God it was. And thank God I'm learning how to use these things so I can share my experiences with you. So when you go to Tradeovate and sign up for these, that you won't make the same mistakes as me. But there was a $2 spread, or it was what I was told is overnight is $2. I can't believe it was $2 because I paid I think $8 that we would close above the 850s when we were down at, or I'm sorry, the 85s when we were down at about eight, maybe it was the 86s I purchased. I don't remember, but I think I paid about $8. And then I went to look at them and it said I was down, basically $1.75 per contract right from the start, which percentage wise is massive. So, again, you want to be sure to go in and bid for these things and be smart about them, especially when the momentum is against you. Speaking of oil, I don't think it's going to trade back above 85 today. To me, that's a pretty good lock. However, the problem is if we were to go in there and say, let's look at a price of the 85s, will it? Oh, there's no market for them right now. So it looks like there's a little glitch on that. I think though that you would probably, because it's so far out of the money, it would probably be about $13 or $14, which is still, I mean, that's like betting on the show. In a win play show, you're going to have a higher probability of winning. You're not going to have, and I'm stealing the horses stuff here with this racetrack, and I don't even go to the horse races, the track to bet. Anyways, I don't think it'll close probably. I think you could be safe with 84. The problem is here on this hourly chart. So this is 1 hour. Let's get a better view on the 15-minute. So it's just dropping away from there. I think this is, if there was a market in there to trade that it will not close above 84, that would be a good bet. I bet you probably that's about $8 or $9. Now, I ended up closing out my oil trade as this happened Monday morning. And I took a loss in it, and that's trading. That's the way it goes. But with these event contracts, it's first of all, I'm experimenting with a new trading product. I'm experimenting for me with a new trading vehicle, which is oil. I've never traded an oil contract in my life. So I traded them tiny. I mean, I think I had 10 contracts, which was, $85. I think I ended up losing 65. So percentage wise, it was massive because I, had this stupid spread and the trade obviously went quickly against me. So I lost 75% of the money on that. But, the thing about these event contracts, I think, compared to my normal type of trading and the type of trading I do on a daily basis is that they truly, you can look at them as my alter ego is going to trade these things a little bit. Sometimes you have that hankering, like, you say to your friend, hey, I bet the market's going to do this, or I bet the market's going to do that. And it means nothing because you don't make that bet most of the time. And then if you do make that bet, great. But, you don't have a liquid market in between. So if you have a liquid market in between, let's say it runs up to 37, let's say I buy those 37.25s, that it will close above that. And maybe I'm being a little bit too stubborn here, but I'd like to get past the 9:30 open before I decide whether or not I want to get involved in these with some conviction. So you can see to buy them right now, the yes is $8, which isn't awful, but I'd like to pay maybe, like I said, 6 or something like that. Let it settle down, and then on the way back up, if it comes back up, then I would be interested in maybe adding to my position. So that's the way I'm looking at these things. We can look at some other markets like gold, which just continues to be in a horrific downtrend. Sorry about that. This chart, I changed the scaling. So here's the daily chart of gold, and just a horrible downtrend. It's still lower highs and lower lows. The U.S. dollar is still in a beautiful uptrend. I mean, you just can't make that up. If you're long the dollar, I think underneath yesterday's lows is the where I would personally get out if I was long the dollar. So how would that translate to the euro dollar? And again, be aware of when these contracts end. This is in 5 hours and 43 minutes. So that makes it uh, 10 o'clock plus 5 hours. So 3 p.m. Eastern is when these contracts close. So you might look at this and say, no, it's not going to close above 98.50. Um, or so here's 98.25. Let's look at the strikes and the 98.50. Hey, maybe I'll buy a new contract, something I've never done, 14.50. So the market seems to agree because we're at 98.20, 98.25 here. So 98.50, I guess that's a long way away for this. Maybe if it was to rally up a little bit towards that 98.35, 98.40, then I would be looking to buy the no because clearly the momentum is lower here. Anyway, next week I'm going to be a lot more organized with this, I promise. But right now, my bias is that we're going to close above 37.25 in the S&P 500, and it's a matter of where do I buy that contract. I think we're going to close below 83.50 in the oil stock, and I think that euro dollar is going to close below 98.50, I think it was. Let's take a look. I don't want to misquote that. 98.50, but I'd like to make that bet if I can get up to about 98.38 or so, and then I would be looking to do it. So these things, you can trade them, obviously, or you can just make a straight bet and say, that's it. I'm locked in for the rest of the day. I'm going to go play golf. I'm going to the beach, whatever it is that you do. Thank you for tuning in. I'm going to get a lot better with these contracts. I'm going to get a lot better with broadcasting live as well. When I do it, usually I'm not on the screen and that sort of thing. But subscribe to the YouTube channel for Place Your Trades. So follow me on Alpha Trends. Follow Place Your Trades on Twitter as well. And if you want a chance to win some free prizes and weekly giveaways, then go to placeyourtrades.com. Sign up for the mailing list. You won't get spammed. It'll be occasional. Classy operation here that Anthony's putting together. Anthony Crudele, if you don't follow him on Twitter as well. He's the brains behind this operation. So thank you for tuning in, everybody. Have a good trading day, and I will talk to you again next week.